Hey guys and girls, Nathan here. Hopefully you're having an awesome week. Just wait for everyone to hop online and got some cool things to chat to you guys today about. Apologies about the delay in us on our live tonight. Just had a few technical difficulties with something else, and here we are live to everybody. So, as usual, thanks a lot for tuning in and spending your Tuesday evening as having me as a part of your evening on Tuesday evening or whenever you are watching this video. So got a few interesting things to talk to you guys about today. It appears that everybody found my video last week very entertaining around economics and how the financial markets are working and where they're being carried out at the moment. I had a few extra questions which I will cover off on this evening. So there's a few things I want to cover off on, a little bit about what's happening out there in the news, a little bit about the economy. I have a balloon here, and no, it is not a condom. This is a balloon, and it's no one's birthday today, but I'm going to use it to explain a little bit about where the economy is at this point in time, just to maybe explain what I talked about last week a little bit differently and put into a different perspective. So, besides that, I want to talk about how I've built thousands of property portfolios for investors out there, been a part of over 10,000 property transactions over the last decade, and each and every single person's position has an issue, right? No one has ever come to me and they're like 100% perfect where they can do everything and everything's great. There's always some form of issue, hurdle to overcome, whether it's finance, whether it's deposit, whether it's equity, whether it's structuring, whether it's an existing property that they've got. There's always something that could be holding someone back, and it's important to have the right team around you. So I want to cover off on a few of those things that have been issues with people over the years. Maybe at that point take some questions from you guys, some things that may be holding you back, and be able to talk about strategies and way to overcome that to help you get to where you want to be. So just getting straight into it. So dollars, money, right? Here comes my balloon, right? Dollars and money. We talked about where they come from last week. Let's put it into a little bit of perspective and a bit of fun. Looking at where the economy's at, why is the economy going so great? So a lot of people are asking me, when's the stock market going to crash? A lot of people are expecting the property market to crash. A lot of people are expecting lots of things to crash. I would have expected to see the stock market crash very shortly, and I still believe that we're in the month of when it's going to be fun. We're entering into September. September is going to be the fun month. So keep an eye out there. I'm going to pull some shares up very shortly. Let's start the party, actually. Let's start the party by looking at this little chart here. Where are we at? Yes, here we are. We are looking at Qantas Shares. For those of you that aren't familiar about it or been living under a rock, Qantas Shares are currently, well, this was at the other day when I took this, yesterday when I took this screenshot, Qantas shares were at $3.73 as of yesterday. So if we look at it from the 1 month chart, it has fallen and come back up. Hit a low of under $3.50 at about $3.20 and a high of $3.73. If we go and have another look back on a 6 month chart, we will see that it has, and go pull this up for yourself, guys. Qantas turns around and says that it's at $3.73, but in February, March, it was trading at $6. After everything crashed, it was trading at $2, and now suddenly it's back at $3.73. If we go to this chart is a 5-year chart. This is just off Google or Yahoo or whatever it is that I found it from. Just Google it. It goes on to say that $3.73, which is where it was yesterday at close at 4:10 p.m. Australian Eastern Standard Time. Qantas shares were trading at $3.73, and they were last trading at $3.73 in March 2017. So it with it looking um, looking at where we're at now, the last time we were at this level was in um, 2017. So 3 years ago, we were at this level. Why is Qantas going so great, right? Let's go look at some reports that came out from Qantas this week. Which article is this one? Yes, when it will load. Just holding on a second. This one's a bit slower. Come on, upload. No, not that one. Sydney Morning Herald article here. Yes, so this one here goes to say Qantas International boss with nowhere to fly departs the airline. So this is just an article from the Sydney Morning Herald as of yesterday. The head of Qantas International Division, Tino La Spina, will depart the airline after his role was rendered obsolete by the grounding of overseas flights for at least another 12 months. Qantas said on Monday morning that Mr. La Spina responsibilities would be absorbed by Qantas domestic chief executive Andrew David when he leaves at the end of the month. It's increasingly clear that international flights will be grounded until at least mid-2021 and will take years for the activity to return to what it was before, Qantas CEO Alan Joyce said in a statement. Under those circumstances, we've seen the decision to consolidate the domestic and international business units under a single division. So it just goes on to say that Qantas is screwed, right? And as Qantas is screwed, we have seen, Qantas shares go all the way up to $3.73, which we haven't seen before. How did that occur, guys? So let's just think about it, right? We had lots of things happen over the last 20 years, or 30 years or 40 years since we had the inception of our dollar. And I actually thought about it. Like, I got the balloon and I said it's no one's birthday. And it just occurred to me that on the 15th of August 1971 is when our dollar was really formed in its today's state, when it became a fully fiat currency. So we should have a little birthday party for it, because on the 15th of August, our currency turned 49 years old, and no one even realized it, right? I didn't even realize it. It was just when I thought about it at the moment, I was like, wow, we've passed 49 years, nearly 50 years in our currency, and it's been deflating. But let's talk about a deflated balloon. And everyone talks about the property bubble, right? It's going to burst, right? But let's pretend this is our dollar, right? Because everything plays with a dollar. So my thought of the week is, it doesn't matter how many dollars you got, right? People say, oh, I've got 10 grand, I've got 100 grand, I've got 200 grand, I've got 500 grand, I've got $1 million, right? Pictures of plastic with dead criminals printed on it ain't really exciting for me. That's not what's going to get me to survival. That's not what's going to put food in my belly and a roof over my head. And it's not going to do the same thing for you guys, for your families, or anyone else out there that you're trying to save. The reality of it is what you can buy. So what is more important? Debt doesn't really matter to me or faze me anymore. Money has never fazed me, right? Pieces of plastic with dead criminals printed on them doesn't really do anything. It's the opportunity of what they can do, and they are rendering themselves more and more worthless as the days go by. You may feel richer because you have got Qantas shares, which could be $3.73, which can be like, well, they haven't done anything, they haven't gone down, but this is where the bubble gets inflated. So let's go and look through this century, this millennium, this last 2 decades, as we turned over the 2000. So what we had is in early 2000, we had a period where we had growth. Everyone's like, wow, it's so great. What did we actually see? Let's actually think back to our last recession, right? Everyone says Paul Keating, the recession we had to have. Good on you, Paul. Good on you, mate. Let's leave politics out of this one, because it doesn't really matter which commie that we vote for. We're going to end up in the same position. So we saw in the late 80s, we saw stock market crashes, the deflation of the bubble in the stock market and whatnot, and then we had to reinflate it. We saw interest rates head all the way up to double digits, right? So this was our first balloon, right? Straight out of its birth. Okay, so we had this little bubble, right? This is a bubble that we had in the late 80s, early 90s. Then we saw it deflate, right? We had deflation. That was the market deflating, the recession that we had to have. And then what did we see happen in the early 1990s? We saw the family unit getting broken down. We saw the wife go out there, and I'm not being sexist, guys and girls, but I remember growing up, all my friends, all their parents, mum stayed at home, dad went to work, all that sort of stuff. No, what we'll do here is now we'll enslave and indoctrinate the wife. So we've got a mum and a dad working. So childcare stimulus packages. There we go. First little bubble at this point, right? We've got some childcare stimulus packages. We dropped interest rates from 20% all the way down to, where are we at now? Well, we're at 7% interest rates, right? And we saw the roaring 1990s, and everyone was like, "Oh wow, John Howard, economic powerhouse. This guy here is so great." And like, I came from a liberal household, guys. I'm sure lots of you guys did, and some of you came from Labor households, or whatever the case may be. Everyone thought John Howard, the politician that saved the world, right? He's selling off things and inflating that bubble even greater, right? We're the tech bubble, and here we are, right? We're ending around 1999, the Y2K bug, and we had a dot-com bust. We had some deflation that occurred in the market. Then what did we have to do? We wanted to spur on breeding so we could have some more tax slaves coming into the community, right? So we wanted to have people breeding. So we gave a baby bonus. We had an introduction of a first homeowner grant. There we are, right? We've got this big bubble that's reinflated. And we entered around 2003, and we started to see a deflation, right? Property prices started to go down, the economy started to head in recession, interest rates started to increase, and we started to see this bubble deflate a lot, and then wow, we went into 2008, 2009. What was it? It was the GFC, the global financial crisis. That point was when I was able to retire from work. Woo! Right? I saw the scam before I even knew it was a scam, right? And here we are in 2008. And what had to happen, right? We saw property prices getting deflated. We saw people going bank repos. We started seeing people lose their jobs. We're entering into recession. But no, we can't afford to have a recession. We need to reinflate that. So what did we do? We dropped interest rates from 7.25% all the way down to 3%. We saw first homeowner grants get increased from $7,000 to $14,000. We saw QE come into the marketplace. We saw many other financial instruments come into the marketplace. This bubble got reinflated, right? And it went all the way through until we nearly lost control of our currency in 2016. In 2016, they realized that we were going to see massive inflation. The only way for them to stop it was to bring in monetary control. And we had tightening of the currency and tightening of monetary policy, where we went from quantitative easing into quantitative tightening. It also was very significant because we were entering into the 10-year phase, where the 10-year treasury bonds were rolling over at a higher rate. So we're starting to see interest rates inflating, even though interest rates had gone nowhere. Enter into this period of time, we started to see that bubble starting to deflate again. Didn't deflate all the way, just deflated a little bit. And here we are in 2018 when we saw the GFD occur, which was in and around that point last week where I spoke about. We're at around the 10th of October 2018 to be exact, and that's when we had the yield curve invert and we had the death cross, and we started to see rapidly the economy go frail. So in October 2018 we started to see the economy contract, which was the early phases of the GFD, where I was out there calling this stuff and everyone thought I was off my head. And most people probably will, because I've got balloons here on Facebook Live, but it's fun, and Instagram Live. And then we started to see monetary policy change, right? And we started to see the money flow change, right? Go from a tightening policy back to expansionary. So getting the bubble reinflated. Then we started to see the repo market issues, right? And we started to see it cross again. And then in around the 10th of September, the 15th of September last year, in that week, we started to see the repo market, the repurchasing agreements, where the banks started to fold up and the central banks having to buy up the balance sheet. So then we started to see more inflation going back into the bubble. All right? And everyone's thinking, wow, why are the shares going up? And the last quarter of last year, think about it, right? In the last quarter of last year, everything was going through the roof. And then suddenly we started to get deflation. Right? We had this thing called Corona. We had these people catching diseases. Yeah, it's China's fault. It's this person's fault. It's that person's fault. It's the person's not wearing a mask's fault now, right? And then suddenly we started seeing the stock market that was looking worse than anything in daily history ever, right? And then here we are, what happened afterwards, right? Let's think about the stimulus package, right? We saw this bubble get reinflated beforehand. What did we see happen? We started to see interest rates go to zero, right? JobKeeper coming in. Job seeker coming in. Tax rebates coming in. Government debt getting taken away. Stock market buying up. Company balance sheets being bought up. Homemaker, or whatever it's called, grants coming in. This is our currency right now, guys. This is one big whopper that we have never seen before. So the question I ask, right, is where do we go from here? The bubble hasn't burst, right? It hasn't burst yet. I see here Antonia says, don't burst it. Well, the thing is that most people think that the property market is in a bubble, right? Just on the matrix, when you realized that it's not the spoon that bends, it's the mind that bends. It's not the properties that are going up in value in any part of the world, right? I talk about property. Everyone thought Nathan talks about property. He must be a property spruiker, all this sort of stuff. Then I turn into a doomsayer. I'm just sharing with you what I'm seeing out there in the market, guys. This here is not the property bubble. It's not the stock market bubble. It is the currency bubble, right? Are we going to see deflation coming through the market, or are we going to see them keep reinflating it? Got some interest rates at zero. That was some negative interest rates going in there. What are we going to start seeing after that? We're going to see more buying up of the balance sheet. Zombie companies being purchased. We've got Qantas at nearly where it was beforehand. Qantas is freaking grounded. Qantas isn't moving for another year, right? They've had to step down the CEO of Qantas. We've got this bubble, right? This isn't Qantas, this isn't the share market, this is the whole economy out there. It's starting to look a bit weird now, this one. How big is this bubble gonna get, right? Is it the property bubble? No, it's the currency bubble, right? There's a lot more to go in it. Oh, sorry guys. Hopefully I didn't deafen anyone on the other end of that video camera. Sorry. I thought it sounded more fun as I was playing it in my head, right? And as is, this economy that we're at, a lot of people don't realize that bubble is about to burst, right? Is it the stock market that's going to burst? Is it the property market that's going to burst? Or is it the currency debt bubble that's about to burst? And I believe that we're in a point with I'm just reading some of the messages here. It looks like someone else is on here. Looks like we've got one of our old friends back here trolling us here. That's good. But yeah, so that is where the economy is at. Where is the economy at the moment? Where is the this currency crisis going to head to in the next quarter? All right, and looking at the writing that's on the wall, we've got some more stimulus packages coming out this week. So let's entertain ourselves. This here was an article from the Sydney Morning Herald last Friday, I think it was. This was published on August 23rd. It goes on to read, call for the states to act fast on infrastructure splurge. Right, here we are, infrastructure splurge, um, you know, government's calling out. So let's read this. State leaders are being urged to act on Reserve Bank advice to spend another $40 billion over 2 years to lift the economy. So remembering that we've calculated that bubble, right? We've calculated that bubble, the money. Right, just having a look here. Someone here is where are we? How do we block these people? So here we are. We're not going to do that. We've got a troll over here. We're just going to have to delete our little troll. Can't actually delete him on here, so it's all right. Keep going. Here we are looking at $750 billion worth of stimulus packages that already came out, and we're now up to another $40 billion worth of stimulus package. So we're almost at that $1 trillion debt bubble that the country has got. $1 trillion worth of debt that the economy has got, right? This is just our government. If you ever think interest rates are going to go up again, think again, right? Interest rates have turned into a very different world, right? When you realize, we go to school, get taught, get a job, pay off your debt, your money is cash, etc., etc. The thing is that just having a look at some of the messages here, looking at when you realize where currency comes from, when you look at what money creation really is, you realize that money is debt. We work on a debt-based fiat Ponzi scheme. The only way to remove debt, you can't. You just got to keep inflating that bubble. All right? And one day it will eventually pop. We have 49 years. The birthday of this currency was last week, actually, as we enter into going almost 50 years into this currency. What will happen with the currency? How will the currency become in the future? Look at this. Right. Let's look at how we can delete. Let's look at how we can delete this person. So looking at the infrastructure splurge, looking at how more liquidity is being put in the system. Let's look at something else for what may happen after our economy completely implodes and fails in the current format of where we're at. So this is an article here, and it's my last article that I'm going to see, this is what the coronavirus will do to our offices and homes. This article came out from BBC News, right? So I encourage you to go and look at the BBC website. Look at the BBC website. Check this out. This is what coronavirus will do to our offices and homes. It was posted on the 6th of August 2020. So it goes on to read, one day the virus will subside, it could be eradicated, but then life will simply not be returned to the way it was before that said word that we will not mention. Spurred on by the crisis, architects have been rethinking about buildings we inhabit. Scroll down to see how the future may look in the future. So it goes on with this cheek called Layla. It's a little animation, and I'll read it out to you. If you want to read along, go and check it out on your own device as well. Goes on to read, meet Layla. It is 2025 and she works from home 4 days a week. It's been that way since 2020 lockdown. So it's been 5 years, right? So this is social sort of programming for us to think, 2025, here we go. Just having a look here. It goes on since 2020. It's 6:30 and she's on her way to work. Layla arrives at an office building at 7 o'clock. She starts at the company where she works, staggered to minimise the number of people arriving at the same time. Her office days are mainly for meetings. Gone are the days where she'd head into the office to work at a screen. She can do that at home. Layla's employee used to share a much larger office building with several other companies. Now they're in a smaller, newly refurbished premises all to themselves. On the ground floor, Layla pauses in front of a thermal body scanner to check her temperature is normal. Today, it is 36.5. She passes. A camera used for facial recognition identifies her as a staff member and a security barrier opens. At no point does she touch anything. Layla is on contactless pathway. The lift to her office in the 4th floor is voice activated. Touchless technology has replaced grubby buttons and the maximum occupancy is 2. On the 4th floor, she walks down the corridor through the door. Both are wider than before, made that way to keep staff further apart and reduce the chance of the virus being transmitted. At the door, Layla uses hand sanitizer. She's used to it now that doesn't even think about it. She just puts her hand out and gets her sanitizer. How nice is that? She sits down at the desk. Much of all the furniture, as well as the wall panels and facade, is made from antimicrobial material. It's easier to clean and harder for bacteria to stick to it. Layla makes coffee in the kitchen area where the worktops are also antimicrobial and the handles and drawers and cupboards are made of copper. It's a costly but naturally microbe repellent material. The air conditioning system uses UV light to kill pathogens. It also reduces humidity to prevent germs multiplying and responding to a stream of data sensors fixed to cameras all around the building, wearing wearable sensors used by staff. So you have to wear a sensor to go into the office. Looking at her cubicle, it says here, Layla's office used to be completely open plan. Now she's partitioned off to left there in a clear plastic screen that she can at least see her colleagues. The screens are removable, bolted in the fixtures to the floor. They go up if there's a threat to an outbreak, but come out if there's threat subsides. In front of Layla's desk, the separation is done with plants. The staff got fed up with plastic everywhere a couple of years ago, so they said it made the office feel like a hospital. Layla prefers the plants. Layla's morning spent in a meeting about a new project, so face-to-face with colleagues, but all at a safe distance. The only reason Layla goes into the office now is for this kind of interaction, which is meeting people, in which meeting people in real life produces better results than seeing each other online. It is 1600 and time to go home. Layla moved to the suburbs with a friend after the lockdown in 2020. It's a longer commute, but she doesn't mind this as it's only once a week. A bigger home meant more space. When lockdown came, she thought she was working from home for a few weeks. It would only last a few weeks and she'd manage with a laptop on the kitchen table. But when weeks turned into months and months turned into years, she knew she would need a home office and her old flat in town was nowhere big enough, right? So is this sending people to a smart city? Let's go on to read a little bit further. This is from the UK, remember. It's not about the Australian smart cities that they're talking about building or anything like that. She now works in an upstairs room. There is a new standing desk, a properly adjustable office chair, and storage for documents. She never realised before how important it was to have good lighting, so she had spotlights installed on the ceiling and a proper desk lamp. Layla is saving up to replace the double glazing. She's near a big road and she needs to concentrate when she's working. Soundproofing is an issue she hadn't anticipated. She thought about a loft extension and building an office in the garden, but decided on the bedroom office option for now. It's been quite a change for Layla and millions like her. Not everything will change, of course. While Layla made changes to her life relatively quickly after the pandemic hit, architecture and reality move slowly. Buildings typically take 5 years to design, finance, and construct. Many people can afford to move house or spend money on home improvements. In the teeth of a recession, many employers won't have the money to relocate or organise. If the disease dies out in the coming months and a vaccine is found quickly, many homes and workplaces could return to something like normal, but aspects of Layla's imaginary life may become a reality for many of us, particularly if there are continued outbreaks with no vaccine, right? So if you don't take that vaccine, you're going to have to be dealing with this, right? Why? Financial pressure to change. Many architects believe the major shift towards working from home will be the most significant impact of the scandemic on the built environment. Why? The short answer is money. Professor David Bruni, who served as New York City Commissioner for Public Architecture under Michael Bloomberg. Interesting that Bloomberg, the Bloomberg media giant, is weighing in on these things. Just as is, you've got a guy that's renowned for selling computers and computer software and, some shady deals, whatever may not go on there, is now, giving, said sort of medications to people around the world as well. So yeah, it goes on to read a lot more. But if we go and think about um, looking um, at just reading some of the messages here. Looking at the world that we're in and where we may be heading into in the future, right? It's very interesting looking at all of this, sort of new technology. We've talked about it beforehand. The technology being the new cameras being installed, the facial recognition, all those sorts of things that are being installed, tracked, traced, tagged. I believe personally, I talked about this maybe like 3 years ago in the mentoring program that my investors that were part of the mentoring program got into. We're talking about the potential of the social credit system, right? When this currency finally dies, we have the remnants of what was here. It is nothing of the balloon that we started with. Looking at the the remnants of what comes after that, I believe we're going to be seeing some form of social credit scheme system, which is a new debt-based Ponzi scheme money, which is much worse than anything that we've ever had in the past. Looking at what else has been happening out there this week. On the note of Qantas, for those of you that are conspiracy theorists out there or people that are asking random questions, there was this article from 9 News. This is from 9 News itself. Looking at that. This here is a picture of an aeroplane at Qantas with an all-seeing eye and a interesting picture printed on it, which was posted on the news. Goes on to read. Here's another image that I saw recently, which is just interesting, which goes on to read about a said medication that should be taken. And one of the articles read is, should it be mandatory? I won't be even saying the word of what it is, but like the thing that goes that they want to give everyone. Should it be mandatory? 30% of people on news.com said yes. 70% of people on news.com said no. However, when you go on to look at the Today Show on Channel 9, it said that 70% of the people had said, and it's the same poll, 70% had said yes, and 30% had said no. So just interesting to see how the stats are skewed. And finally, everybody should go to their phone, go to privacy settings. I saw this thing the other day and I went and checked it out for myself. So it is in your phone, and it is in your privacy and under health if you're on an iPhone. And it goes on to read that there is a exposure logging. So your phone has automatically updated and upgraded your settings to install tracking software for you, right? I didn't ask my phone provider to go and do that. Why is my phone now updating my information for me? So yeah, looking at just some of the things out there, guys. Looking at some of the things out there. So, what else did I have? Any other sort of points here to talk about? I think just finalising on my balloon analogy and the economy and where things are at the moment. When people ask me, what is wealth traded in at the moment? Are we looking at dollars, pictures of dead people with pieces of plastic with dead people printed on them, dead criminals printed on them? That's money. Are we looking at digits in your bank account? What does real wealth look for you? For me, it's about, I've always talked about how many properties one can own. I've always talked about the importance of cash flow, because if you see, inflation occur, the inflation will occur, 1, to the asset prices, 2, to the cash flow that comes from that. I think, looking at the amount of access to food's a very important thing nowadays. And I think everybody should be able to, just reading some of the messages here. I've got a troll over on Facebook, guys. So yeah, how many fish do you have in your pond? How many fish can you go and eat? How many lambs do you have? How many cows do you have? How many trees do you have? how many whatever, right? Are you still valuing things in dollars? Because looking at dollars, that's not something that one should aspire to value their life in. A lot of people go and spend their life chasing dollars. The illusion of chasing money is something that leads you down a path of interesting times in 2020 that may be. Looking at one last thing to comment on about interest rates, right? So a lot of people asked me about my conversation last week, interest rates coming through. If the economy was so great, how come we last increased interest rates in 2010, right? That's when the bubble started to run away, and then we had to drop interest rates, and we were never able to increase interest rates here in Australia again. Monetary policy since 2010 has been heading in a negative direction. Monetary policy has been of expansion for most of the last decade. We have not ever been able to return to normal from a currency manipulation standpoint, and we are about to see it head into a whole other stratosphere over the course of the next weeks, months, and the next years to come from this. The next decade is going to be one of the most exciting times I think we can all sort of expect in our lives. So be prepared for it, guys. Final notes. I don't look at money. I think a lot of people are too focused on, can I save 50 grand? Should I have 100 grand in my bank account? What about if I get 100 grand? I want to pay off a mortgage, or those sorts of things. I think this is a time to look at the assets that you control, the things that you actually control, and not currency that are out there. So with that, over to you guys. So a lot of people, I'm seeing a lot of comments here, but some idiot is commenting too much on here, which I can't seem to delete at the moment, which we will get to shortly. Topic of discussion today is everybody wants to get ahead in life. How can you get ahead? What things are holding you back from reaching your goals? What are some of the things that I've seen over the years with Oh, good. Thanks for giving me the heads up on that. I can't seem to delete on this device, so it doesn't stop me from downloading it on another phone. So sorry guys, got to do a good little blocking here for someone. Pages app. Just doing a little download and delete for someone. Jenny just made a comment there that the article that I was talking about and referring to there, I will share it in Birch feed shortly. If you are on Birch feed, you'll see that. If you're not on Birch feed, download Birch feed and go to birchfeed.com and get yourself access to Birch feed for free today, and I will share that article there. Looking at, I had the app on this phone anyway. Looking at where people get stuck along the way. Probably one of the main hurdles that I see for most investors, it's been one of the things that has always been the hardest thing for me to overcome, is finance. Finance is the most difficult one, and a lot of people get that screwed up because they focus on the wrong things. Whether it be from getting the cheapest interest rate. Most people come in and they go, okay, what's the cheapest interest rate? What's the best interest rate that I can get? I've never been a fan of trying to get the cheapest interest rate, because if you go for the cheapest interest rate, and you get stuck, it's all about getting the largest amount of assets collected. So I always question, like, if we were to go through a property boom today or tomorrow, the property market could double. If you had $1 million worth of property and it doubled to $2 million, that would be cool. if you had $5 million and it doubled to $10 million, then that would be even better. So, ultimately, if we're going to see the market go up, the market double, would you want to be doubling, 500 grand into $1 million? Would you want to be doubling $2 million into $4 million, or $5 million into $10 million? And that's the ultimate question there. I'm just here deleting someone and trying to block them on. There we go. Our friend is gone. Our friend is gone. Our troll has gone. If you were, for those of you that are watching on Instagram and other sources, someone on Facebook's been a complete and utter dick. So yeah, if we'll see a property market double tomorrow, is your main interest and main concern trying to save the difference between 2.69% and 2.79% and getting the right loan product to do that? Or is your interest involved by trying to get the largest amount of lending to support your portfolio growth? And I see all too many times when people come to me via a map session or a discovery session that they don't have the ability to sorry, I've got stuff popping up on every screen here, that they have the I wish people would stop messaging me too. I've got about 40 pages open on the bottom of my screen on Facebook, and I can't stop them. It's been a technical difficulty day. So yeah, looking at some other hurdles. So people get into a position from focusing on the wrong loan structuring. People get focused on the wrong ability to be able to obtain finance, find it difficult to. They might buy the wrong properties at the wrong time in their portfolio. One of the most common things that I see from investors when they come to me is the inability to service. So they come to myself, we have a chat, and they're stuck at like 2 or 3 properties. And there's a big difference between having 1 or 2 properties or having 10 or 20 properties. And it all comes down to getting the right strategy in place, the right structuring in place. I talk a lot about acquiring the right assets, but the other aspect of it is by having the right debt strategy. So quite a lot of the time people will buy good assets, but they might buy stuff where they need equity, and they might buy it for cash flow, or they might need something from a cash flow perspective to build their servicing up, and they buy something because it's for equity. Quite a lot of the time I see people get stuck because they're trying to buy properties that they can develop upon, or they might they buy the wrong property for their strategy. So having clarity on a strategy is crucial. The other aspect is looking at we've got our mate on Instagram here trolling us now as well. He's gone over to Instagram, so see you later, mate. So yeah, looking at other hurdles that people come across on a day-to-day basis. When people get stuck from a servicing perspective, they could get stuck, not being able to get a loan, not being able to continue from a finance side of things, but they, someone may not be, they may not be able to keep continuing to buy. So I was having a chat with someone today about building out their portfolio, and they're like, what do I do for finance? I actually had a chat with one of you guys. I've seen you on here on Facebook earlier on, where I was having a chat talking about next steps, and you're stuck on a servicing perspective. So my views on that was to buy a couple of cheap properties cash, and then once you get back over the servicing perspective, because you've got the cash flow coming in to your portfolio, you'll be able to continue buying. I actually just saw someone hop onto this Facebook Live. And if you don't mind, you know who you are, and you'll be interested when I talk about your scenario. So if you don't mind, I won't mention any names, I won't mention anything in specifics, we'll give it away. But I've got this investor that has got a very nice portfolio, got sort of double digits in their portfolio, and was stuck. Was been trying to make this one deal happen, and this property was purchased for I think about 330,000 in about 2017. Recently made the decision to sell this property on. So the person wants to buy and build and expand their portfolio from I think it's about 12, I think it's about 10 or 12, and go to the next level of getting to 15 and 20 and being able to retire. This one block of land, which was to do a project on, which would have netted about $200,000 if all the stars aligned. Trying to push that to get over the line was a little bit of a difficulty. So suggestion probably about 3 months ago was to sell the property, which they did. Sold it for I think about 410. Made a little bit of profit after cost, but mainly to exit out of the deal. My suggestion was to go and purchase 3 more properties in the portfolio, cash. So by selling that property would have netted a position of about $200,000. Go and purchase 3 properties cash for around the $50,000 to $100,000 each, renting for around $200 per week. The extra cash flow would have assisted in this person or this couple being able to go on and restructure their debt. So the position now is to purchase and acquire those 3 properties cash, have the title deed, so 3 properties outright, sell one, buy 3 properties outright, take those properties and that cash flow, refinance the rest of the portfolio to a lower interest rate with a big 4 bank rather than a second tier lender at a cheaper interest rate, save maybe $20,000 or $30,000 a year on interest payable on the portfolio, and then open themselves up for another sort of $2 million worth of servicing to build the other half of their portfolio, and obviously eventually purchase their dream home to live in. So, people get stuck along the way. I did a video the other day, a very cool video with someone, which will come out shortly, which was about someone that had 2 properties, and I won't go into numbers. I'll leave that for the video when it comes out. But this person had 2 properties, and didn't have the ability to go and get a loan to purchase more, and was very nicely been able to offload 2 properties, and then be able to go and purchase almost 10 properties within a period of a month to 8 weeks, and from that be able to build a whole brand new property portfolio, one being a principal place of residence outright, and then a whole new property portfolio there. So I guess in essence there's many different ways that we can get stuck and many different ways that we can overcome our hurdles and our positions in our portfolios. I encourage it, now that we've got these people that have disappeared from our Facebook Lives and trolling us. If you'd like to put some of your questions where you may feel sort of stuck on something or may need to overcome a hurdle of your own, I can answer them and go into some small detail here to be able to give you a bit of clarity and light on how you could overcome. Because very clearly, as I said at the start of this live stream today, is that so many people that come to us, right, out of all the thousands that have helped over the course of the last decade, it's rare that someone will come without some sort of challenge or position in their portfolio that they don't have to overcome. I've got a mate of mine who I work on a project with, which has got nothing to do with property. It's one of my little hobbies that I do, which I was getting annoyed with a couple of years ago. And I was like, look, this should be easy. This should be easier. Why isn't it easier, right? And it's something I've been working on for like 3 or 4 years now, and it's finally coming to fruition, coming out of the ground. And he turned around, and his famous saying to me is, Nathan, look, nothing in life worthwhile is ever easy. If it was, everybody would be doing it. And it sits well, with a lot of things that I look at in life, is due to the fact that there will be hurdles, there will be adversity along our way, there will be challenges, but it's how we face them and how we strategically look at them and overcome those challenges, which gets us to the end goal of where we're going to be at. And a lot of people give in or give up and throw in the towel way too early, and don't actually accomplish their goals. So just having a look here. Just having a look. I'm trying to get through to your questions, guys. So keep the questions coming through. So I've got one here from Stocky. Hope you're doing well, mate. Robert Kiyosaki defines wealth as if you stopped working, how long could you survive? When I read that statement, my mind just blew. Well, it's something that, it is really important, right? Like most people, I think it says that they wouldn't have enough for like sort of 4 to 6 weeks worth of no work to survive. So like, where are you storing your energy? Your money is really just a representation of the energy that you're putting out there in the system, right? People go to work, earn money, pay their bills, all that sort of stuff. But where are they storing the energy? In the world today, our debt-based Ponzi fiat bubble, which is like our balloon that we blew up earlier in this video, is keeping people trapped without the ability to save. So you're becoming more and more and more dependent on this system that we're all stuck to and accustomed to. So it is important to look at that. I do need a moderator here. So where are we? Love the fact that I see a lot of you guys trying to call this guy out. It is a troll. Okay, cool. So cool. I've got a question here, and I don't want to go too much into it. It's from Hugh Drunet from over on Facebook, and it says, "What do I think of a certain company?" And I'm not here to, talk down about companies or whatever. It's a certain person. It says he seems very smart, but he always says to buy inner and middle ring suburb. How do you do that? If you have a chat with me without a 900 grand borrowing capacity. Good point. You've got to look at where people are coming from, right? Like, what are their agendas? What is their business model? What are they there to sell you with, right? As a business, I've got lots of services that I can help you with. I can help you, buy properties. I can help you from a legal perspective. I can help you from a tax perspective. I can help you from a strategy perspective. I can help you from locating and negotiating deals for the buyer's agency, from managing properties. So I can help you from all different fronts. I can't help you with getting a said injection into yourself that they're going to try and force upon you. I can't help you on many other areas. I just share things that I think that you guys can benefit from, that you guys like, and be able to discuss ideas and strategies. A lot of people out there are trying to spruik their wares. So their business model is fully aligned with selling some new properties, off the plan properties, glossy brochures, charts showing stats and all that sort of stuff about how their property will perform, which is all magical. So be very careful when you get that advice. Do your research into the strategy, and even go and ask the said companies, whoever it is, if they can give you some examples of people that are at arm's length from them as a business, and show you exactly how they were able to do it, and people that were in the same sort of position as you. And can you speak to them? Like, can you pick up the phone, have a chat to those people, and suss them out, and see what they have to say. Jenny says she loves Birch Feed. The Birch Feed website is down at the moment. Something has gone on. That was where my technical difficulty was. So yeah, birchfeed.com. Check out. If you can't get on there now, check it out in an hour or so, and you'll be able to, get access to it. Jeremy goes, I use Birch Feed as my morning magazine over coffee instead of the mainstream news channels. I see that you've got 7 likes there, Gemma, and shout out to everyone that's loving Birch Feed. Now, if you do like Birch Feed, add your friends, get them to join, send them to birchfeed.com, get them in there, and start waking them up, because having meaningful conversations with people in the future, and at this point in time, there's not many people out there that can have those sort of conversations. Hugh asked how many properties to retire, and that is a very, very important question. How many properties do you need to retire? You need to work backwards and reverse engineer what is the end goal, where are you, and sort of draw that plan. So if you needed to retire and have $50,000 a year income coming through, $50,000 a year is $1,000 per week. You need to generate more than $1,000 per week rental income after all expenses into your portfolio, and then you can retire. So it might be a matter of having 3 or 4 properties that rent for $300 per week paid outright in your portfolio. The strategies in how to actually get there, everybody's position is different. There's something that I normally work with one-on-one in a map session to work out, where you are, what you're trying to achieve, how to get from where you are to where you want to be. But if you, just break it back down. If you want to be, built, if you want to be, looking like Arnold Schwarzenegger, it doesn't. You don't just wake up and start looking ripped like him, right? It all starts with one push up, one bench press, one dumbbell curl, one, chin up, one, sit up, whatever it is. It all starts with taking some sort of action. So once you can break it down and work out where you want to be in life and where you are, then you know what vehicles and what options you've got in order to be able to get there. Most people that I see, very rarely is there people that come to me that I can't actually help out in any sort of capacity. So if you've got, a lot of properties already and you can't move forward, well then let's look at the assets of what you've got. Let's reassess your position. Let's see what you can do to tweak and improve your position. If you are sitting with no properties and you've got no savings or minimal savings, then we've got to work a plan on how to be able to get there. I was meeting with someone today. I don't know if they're watching this evening. My conversation is this person was in a very good position. Just the only downfall was that they couldn't get servicing because they didn't have a job. They're in a very, very good position. Could double their portfolio over. I think they had about 6 properties from memory. Was able to get to maybe like 10 or 12 properties. My suggestion in our conversation was go get a job, and then we can go and look at how we can restructure that portfolio and tweaking a few things. So I've literally seen people go from 1 property to like 7 properties within 6 to 12 months. I've seen people go from 2 properties to 10 properties within a month. And these people weren't able to get finance. So it's how do you restructure what you've already got or work with your position of where you are today to get you to that end goal. So whether it is to retire, whether it is to have more capital, I feel when I look at people in life, and I've come from blue collar upbringings to where I am today in life, and the biggest difference that I see is the mentality and the mindset of how you look and observe and react to situations that come to hand. So you looking at tax, right? I see people that try and save every cent they can on a tax perspective, right? If you're going to be trying to save every cent that you can from a tax perspective, don't expect to be able to go out there and purchase property, right? If we're looking at a scarcity mentality or an abundance mentality, we need to look at strategically how we're going to get ahead. A lot of people look at from a debt perspective, debt is bad, right? But when you realize that the money that you use is debt, you realize that it's all one of the same. And it's ultimately about the asset control and the position of where you hold your assets in your portfolio and how you can move forward from there. Looking at when I was younger, I used to think about saving money and spending, exchanging my time for money. So what I've realized from when I started to where I am today, the biggest difference between those that are wealthy and those that are poor is that poor people sell their time and try to save their money. Being wealthy, I look at how can I expand my asset position and my net worth position, as well as expanding my cash flow position. So I'm constantly looking at ways where I can tweak my cash flow, whether it's $10 per week in a rental perspective, whether it's changing something, slightly different so you can get greater sort of returns in your position. All about expanding your cash flow. My jumper, everyone asks, what does this mean? Go type in 1 billion in the calculator. NB 1 billion. I want to get to $1 billion, so I've got to look at different ways on how I can get there. Doesn't come from saving $2 or $1 here or $1 there. That is good, right? Being mindful of how you can save your costs, but ultimately the cash flow position, your net cash flow position at the end of the week. So what can you do in your current position to be able to improve your cash flow and your net worth position? I notice that Instagram is about to end, and we will come back in 2 seconds. Where are we? Instagram. Next questions from you guys. Frank, thoughts on buying a property versus a business? Also, you have a 50 grand Queensland house for sale. How far from CBD and what is the rent? Frank, good question. So thoughts on buying a property versus a business. There is multiple different things there, which you need to work out how will that business fit into your portfolio to help you get to where you want to be. So business, I always said to myself, I'll go into business when I built a successful property portfolio. It's probably the opposite way around for a lot of people. Most people go into business and then build a property portfolio. I looked at my job as being important factor for me to be able to use those pay slips to be able to go get loans, to be able to go buy property. So depending on what sort of business, if you're going to be going into business, a business could start you nothing. For me, every one of my businesses, I've got a dozen plus businesses out there. I've always started my businesses with something that worked for myself and expanded and scaled from there. I see so many people go out there and spend $200,000 on a business, or $300,000 or $500,000 on a business, and how those businesses faring after we have got this scamdemic that's going on. How many people are still going to be in the business after this? What are your fixed costs going to be for you? So there's lots of variables when going into business, and if you're going into business, it's not something that's in line with your experience and whatnot. It can be trouble. So just be cautious, because there's a lot of people out there spruiking sort of business, buy this franchise or buy this or buy that. Lots of people out there try and build a side hustle. So, if you're building an Amazon business or doing some sort of business like that, there's all these courses to tell you how to make money on these things. So just be careful on that as well. But, I speak to people and they say to me, Nathan, I want to set up a business, and, what should I do first? Should I buy the property or should I buy the business? And I ask them, what sort of business is it? Sometimes people say, it's an Amazon business, or it's a business around my hobby, or whatever the case may be. I think about it, I'm like, how much does it cost you to set up a Facebook page for a business? How much does it cost you to set up an Amazon account for your business? How much does it take to set up a YouTube account? These are all things that you can take action with today to help you get closer and closer to your business goals. If you're looking at getting the business, does the business really need to cost you $100,000 to set up, or $200,000, or is that a business that you could start tomorrow or even today after we finish this live stream? Could you go and say, okay, I've got this idea in my head, it's crazy, let's go and start putting it in action? Because a lot of people overthink and overcomplicate the reality of it, right? I see people having meetings about how they're going to set up a business, and it's like, well, just set up the Amazon account, right? Because then if you're going to start an Amazon business, people go, oh, what about the products? What about this? And it's like, we'll set up the Amazon account. So then when you wake up in the morning, you go, okay, I've got the Amazon account set up. Now I need to work out how I'm going to get my stock. And you can start building your business out that way. Look at how you can continuously do stuff with the minimal amount of capital required, because that brings an element of risk. If you go and, invest, 50 grand, 500 grand or 200 grand into a cafe or whatever the case may be. But looking at the property that I've put out there, I put out a post for those of you that are asking onto Facebook earlier on today. I think some of the numbers were, there was a block of land for 10,500. I had a few blocks of that. There's a couple of blocks left. There was a house for 52,000, which is still there. There was a property in Sydney, which was 4Ks from Sydney CBD, off-market bulk purchase. Purchase price is 490 to 510,000. These were one-bedroom units with a car space, 4 kilometres from Sydney CBD. Comparable properties on the market for around a $680,000 mark. So it's a good sort of 200,000 there below what the comparable properties are on the market for. So, yeah, with it, on that note, need to speak to my team about that. You can email my team at admin@binvested.com.au. Yes, as I said out there, for those of you that are rejoining back over on Instagram, um, a block of land from 10,500. That's what I've got my hands on today. Stoggy, what are some good books that some people have read to get the financial mindset happening? I've already read Rich Dad Poor Dad and Think and Grow Rich. I'll leave that for other people to go and comment on over on Facebook Live. I don't read books personally myself. I watch a lot of YouTube videos. I put a lot of resources out there in birchfeed.com, just stuff that I come across on a day-to-day basis and I feel it's important to share with people. So yeah, I'll leave that if someone's got any suggestions to maybe make a comment there to you, Stoggy. And yeah. Rob, would you use equity to buy a principal place or more investment properties? That's a very good question because a lot of people get stuck at that point. A lot of people come to me and they're like, oh, Nathan, I'd like to buy a property portfolio. I'd like to build a property position up. How do I get myself rolling from that front? I've only got 20 grand saved up. I've got kids. I can't save too much. I can only save 20 grand a year. How can I build a large property portfolio? Looking at, we've got to go back to the basics and see, okay, what are we working with in order to get you close to your goals? Sometimes people would have bought a property a couple of years ago. There's a bit of equity in it. They may be wanting to buy a house to live in. They're all good questions. So, the ability to pull equity out of a property, a lot of people are sitting on equity and they don't realize how great their position really is without looking at all the cavities. Talking to someone today, they have got six properties in their portfolio, and I was able to see that we could buy two inside of a super fund potentially. Not that I can give financial advice on a super fund. However, I saw there was an opportunity there, and my next point of process is to be able to put them in contact with a financial advisor to talk about the potential of doing a self-managed super fund. So potential to do two properties in there, and the ability that there was a lot of equity. We just had to tap into that person's equity, which they couldn't. So we're talking about the fact of buying some cash flowing properties with some cash that they had to then open up the equity and be able to get back on the bandwagon to get them to sort of 12, 14 sort of properties in their portfolio. So, people could have bought a house 10 years ago, could have bought a property 5 years ago, 3 years ago, 6 months ago, 3 months ago, and there could be equity in there. There's lots of investors that I see on a day-to-day basis which, buy a property, and because they bought it so well below market value, they can go back within 2 months or 3 months, pull that equity out and use that equity to buy the second property, the third property, the fourth property, or whatever the property it is. Should you go and purchase a property to live in or for investment? It's personal opinion on that front. For me personally, I remember moving into my first principal place of residence ever that I bought, and I had some newspapers that said the Donald Trump of Australia, this guy's got 150 properties. And I was thinking to myself, as I had this box and I was opening it up in my new house, I was thinking to myself, they called me the Donald Trump of Australia. This is when everyone liked him still. It was pre-2016. I was thinking to myself, everyone's saying he's got 150 properties, but I'm moving into my first principal place residence. And I thought to myself, imagine if I never bought my investment properties, I wouldn't be able to live in 5 acres in northwestern Sydney. I've now moved into larger acreages and got larger farms, but it's a different story. But ultimately, I look at property as being the vehicle to get me to from where I am to where I want to be in the future. I made a decision at the early days that I could have bought a principal place residence that would have been a red brick house, 3-bedroom house, and I wouldn't have been too comfortable in it. But that's not my dream home. So I made the decision to go and purchase investments that were going to be paying me cash flow every week to support my lifestyle. So you could buy one house to live in, or you could buy that could be worth 500 or 800,000, or for the same money, because you physically have to pay that loan every month. You don't have tenants there paying you cash flow every week. You could possibly go out there and buy 5 properties that are rental properties that are bringing in cash flow every week, and you could control $2 million worth of asset instead of that $800,000 worth of house. That $2 million worth of asset or $800,000 house could both go up in value. If they both double, you could have $2 million turn into $4 million, or you could have $800,000 house turn into $1.6 million worth of house. The difference is that cash flow that's coming through, and ultimately at the end of the day, what is going to be more beneficial for you. For me at the time, it wasn't about having that house to live in, but I do understand some people have children, family, schools, a bit of comfort to have a roof over the head that you own, rather than having to rent. So it's all dependent on one's personal goals and lifestyle. I often think about it like this taxi analogy, right? If you had $500,000 today, could you go out there? You could possibly go out there and buy a Lamborghini cash, cool. But then you've got to think about tomorrow how you're going to pay for the petrol to go into the Lamborghini. Or you could go and spend that same 500 grand to go buy 20 Ford Falcons and send them out there to be an Uber and collect the cash flow. Collecting the cash flow from them being an Uber, then you could use that cash flow to go and buy yourself a Lamborghini and then pay for the servicing and whatnot. So which way do you want to construct your portfolio? If you're buying a house to live in, it's not an investment property. It's purely a place for you to live and rest your head. So you've got to question yourself, sure, it's a house. It's just buying a Lamborghini, but a Lamborghini isn't a taxi at the end of the day. So you need to work out what are your goals and motives behind purchasing the properties and adding them into your portfolio. Nathan, thoughts on the RBA's August cash rate decision, down or the same? I believe that will be the same. I haven't looked at it for the last 24 hours, but I'm going to go into it now and give you my feedback and thoughts on that front. Something very interesting has happened over the course of the last week or so, and it keeps getting more and more evident each week that goes by. This is the ASX 30-day interbank cash rate futures. So if we have a look at this chart here, this is what I've been using for the last sort of decade to understand where interest rate decisions are going. For the first time, they have dipped below 11.5 points. So meaning that 25 basis points is where we're at, so 0.25%. Every time it's been less than the halfway point, we've seen a rate reduction that following month. It was fixed for the first time ever. Every month for the next 18 months said 12.5 on it last week. Currently, everyone is under 12 basis points. So if that was to be on the old days before that we had bond control happening out there, which is basically the central bank buying up the bonds, yield control they call it, I would have said that we would see a rate cut. Nothing is given at this point in time. It is very fixed at that 12 basis point there. So I am going with a hold with no rate cut for this month. However, it doesn't mean that we won't be seeing that in the coming months. I believe that we are on the eve and on the cusp of seeing negative interest rates, and I believe that we will be seeing a downward spiral, downward movement in the RBA's cash rate decision over the course of the next coming months. But that's just my thoughts, and obviously, as always, no financial advice. Nathan, we have 3 rental properties working towards 10. We are cash flow positive across all houses. How can we assure that we are doing the right things to be able to keep refinancing? Cash flow is king. Do we need to move to cheaper areas? Currently, all property is in Auckland, New Zealand, and is getting expensive here. Is in 500 grand plus is the entry level at the moment. I'm not too familiar with the market there in Auckland, but I've always, in an ideal world, my properties would all be acreages in Sydney with unit complexes on them, which unfortunately isn't what I've been able to afford. I've bought properties as cheap as $2,000. I've bought little units, little singular units, bought large acreages, bought unit complexes, shops, strips of shops, motels, all different things. Ultimately, I purchase what is going to help me get to the next step, every step along the way. So am I needing cash flow today? Am I needing equity today? It's a question to be asking yourself is, like I remember when I got my sort of maybe seventh or eighth property, I was stuck. I bought a handful of properties that they're all houses at the time. I was told, don't buy townhouses, don't buy units, buy houses. They go up in value, townhouses depreciate, etc., and you can't control the land. I got to a point where I was at about seven properties in stock, and then I found my mortgage broker, which was Rose, and I said to her, I want to buy another property. Couldn't get anything. I was locked out at the banks. I found this little bank repossession townhouse that had sold for 300,000, and it was 125, 135,000. And I went to her and said, "Look, can I buy this thing?" And she said, "Look, you can buy that." And I was surprised. I was like, I thought I couldn't buy anything. So I went along, bought this townhouse, and yeah, it was pretty cool. And then another one came up in the complex. And like everybody that starts buying a townhouse or a unit, I thought to myself, maybe I can, with that townhouse there, maybe I can buy a second one in here. So I asked her, could I buy another townhouse, thinking that I'd be rejected. And the banker turned around and said, "Look, we'll let you buy another townhouse." And I questioned myself. I was like, hang on a second. How couldn't I buy a 250 grand house where I could buy two townhouses for 130 odd grand? And the decision came down to the fact that there was two lots of rental income coming through. The house was renting for like $200 a week. This is way back in the early 2000s. And the townhouse was renting for like $160, $180 per week. So the cash flow was much greater from having those little townhouses rather than having the houses, and that enabled me to continue buying in that period of my portfolio. So ultimately, I would have rather have had houses, but they weren't going to get me to where I wanted to be. So I went with the townhouse option. And my portfolio is made up of a balance of townhouses, units, villas, houses, and everything that I said beforehand. So you need to look at your position. If you can't get a loan, reassess, maybe take a step back and go, before I buy anything, how is this property going to help me move forward, or how is it going to hinder me in moving forward to the next one? Because it's not about, most of the time people are thinking about, I want to buy a property today, and what's that property going to look like? It's not about the property that you're going to buy today and adding that to your portfolio. It's about the property today and how's it going to help two or three properties down the track. Are you going to be able to go out there and pull out equity? I was talking to one of my investors, one of my new investors, that wants to buy some property. And I was talking about a unit that we purchased in Sydney. And he was like, how's it going to fit into my position? And very clearly, we needed to get equity. So there was one property that this person has. They've got the ability to buy two more, so it'll get them to number three. And then also I asked him the question, I was like, how will we get to number four? And he's like, well, we need more equity. And I was like, well, this property here, we just purchased one for X amount of dollars, and it valued up for $45,000 more at purchase, which is very rare because banks would normally just confirm purchase price. And my view on that is that if we can go back in a period of sort of 2 months or 3 months, pull out that equity, there will be the deposit. I've already factored the deposit for property number four when we purchase property number two. So we need to look at, as we're acquiring the assets, how those assets that you're acquiring today going to help you get onto number 5, 6, 7, 8, and 9 and 10. So looking at what you're buying at the moment, if you can't see it being a sustainable model, you may have to look at cheaper options or different types of properties. And that doesn't mean go buy a whole pile of cheapies, because that may hurt you on another perspective. So you need to have a balance of cash flow, growth, yield in your portfolio. So sometimes, I was talking about that property beforehand where I've got a bulk deal 4 kilometres from Sydney CBD, worth 680, purchase price at like 490 to 510. A car space in the area is worth sort of like 100, 150 grand. Looking at how that property helps someone, it's going to be negative cash flow, maybe like 150 bucks. But if you could go back on a property that you made 150 grand on overnight and pull out that equity and then use that 150,000 to go buy two positive cash flow properties that are positive cash flow $50 or $100 per week, the two positive cash flow properties are going to offset that one slightly negative cash flow property, and then collectively as a group of three, those properties will be neutral cash flow, and you've got a larger asset base. So you're qualifying what the bank requires from you to obtain more debt, and to keep acquiring more assets after that. So you need to look at more so than the actual asset or the property itself. You need to be looking at what is it doing to your position and how is it going to help you move forward and get further on in your portfolio. Shane, negative interest rates by December 2020. I had projected that would be at 0% interest rates by the end of the financial year, which were at a rate of 0.25%, which in real terms is 0% interest rates. Will we see negative interest rates by December 2020? It will be a ballsy move for me to say at this point in time whether it will happen by that day or not. I would just be guessing. I don't know the tricks or the cards that are up their sleeve at this point in time. We've got to wait till the wizards, call their magic, which is just printing money and quantitative easing. But I believe that we will see, as soon as I see the signals that will be 100% confirmation before any of the news is reporting on it, I will be putting my credibility on the line once again, as I have done all the time throughout the last 3 years, or even the last 10 years in videoing and putting my content out there, by giving you guys the heads up and the alertness that we are. Alertedness, is that even a word? The pre warning that we're going into negative territory. I know we are heading there. The writing is all over the wall. We have to go there. It's the only way of us to be able to keep this train on the tracks. Whether it happens by December 2020, March the 1st, 2021, who knows the exact date, but we are heading there in the not too distant future. We are on the eve and the cusp of negative interest rates. Tommy, what is your best advice for a rookie on what strategy to use when building a property portfolio fast? A lot of people ask me, Nathan, what is the sort of what's the best property I could buy? Where's the hot spot? What should I buy as a property? Should I get into development? Should I do a duplex build? Should I buy a block of land and build a new house? Should I buy a unit? Should I buy a block of units? It all comes down to everyone's position on where they are at. So my best piece of advice would be have a strategy that's going to help you get to where you want to be. Understand clarity. Have clarity as in where is the position that I'm going to be at in the next 12 months, 24 months, 36 months, 60 months. Where am I going to be in the future? And then working backwards from there as to what steps do I need to do in order to get there. Do I need to, get some equity built up? Do I need to get some savings? Do I need to sell off a property? Do I need to, get a high paying job? There's lots of different things that we can be doing, and everybody's position is very different. If you try and copy someone else's steps that they're taking, you could quite well get a very different result or hit a roadblock. What you want to do is remove all the hurdles along the way by sort of prognosticating and looking back and reverse engineering a strategy that's going to get you to where you want to be. So having the right strategy in place, making sure that you're buying the right assets in line with your goals, making sure that you have clarity on your goals, making sure you fully understand what your existing position is, and how you can maximize on it. A lot of people go out there. I've seen people buy a property. They're going to go buy the second property in a month's time. So you could buy a property today. Let's assume you're buying a property today, and it's an awesome property. You got 50 grand equity in it. You go back next month, you pull out the equity. The day that you buy the property, you fix the interest rates for 2 years, right? The next month you go and get a revaluation on it, and you can get equity. But the problem being is that you can't refinance the loan because you have fixed it for 2 years. Making sure that you don't screw yourself up with just some silly rookie error is crucial. And there's literally 100 ways to kill yourself and 100 ways to kill it in investing and in property. Having clarity, on where you're traveling to gives you the knowledge to go, hang on a second, I feel like there's a landmine here or a bear trap to step into or something like that, and ways to avoid it and not make those silly mistakes. So we've got here Angelito has said, read the whole series of Rich Dad, Cash Flow Quadrant, Rich Dad's Guide to Investing. Robert Kiyosaki's good guy to start getting some knowledge from out there. Hit him up if you guys haven't looked up Robert Kiyosaki. He's a good guy to follow. Um, Gemma, a bit of an old school, but the book Richest Man in Babylon is fab. It's cool. Thanks, Gemma. Sam, hope all is well. One, if you're a 20-year-old starting out and only had $0, what would you do? Let's assume capable getting a job income of 60 grand a year. And two, do you think real estate agents are overpaid for what they do? Three, would you take the risk of actually, there's a lot of questions in there, Sam. So I'll answer them one by one. So, one, if you're a 20-year-old starting out and only had with $0, what would you do? Let's assume capable of getting a job and income of 60 grand a year. So, first and foremost, I'd get the highest paid job that I could get for the minimal amount of work that I could do, even if I had to go work two full-time jobs. And that is exactly what I did. I worked two full-time jobs for a period of 7 years. I took all the cash that I could save, kept all my expenses at minimum, and plowed that money into property and purchase assets along the way. I would be saving up those deposits, purchasing assets that are below market value. Could be, save up $30,000, which is a 20% deposit on a 150 grand property. Saving up 30 grand, buying a property for 150 grand, going back, pulling out equity within a period of 3 to 6 months, using that equity to buy a second property, and repeating that process once a year. If you could save out of your $60,000, $30,000 a year, keeping your expenses as minimal as possible if you're a 20-year-old, $30,000 a year could be a deposit once a year you could save. If you could buy one property cash deposit and one property with equity deposit per year, that would be two property purchases per annum. If you have to do renos, do renos. If you have to eat shit. Just do the hustle to build up that portfolio. If you could build from the age of 20 to the age of 30 a portfolio of 10, 15 properties, that'd be a really cool position. I see so many people, so many people out there saying, "Oh, it's all too hard." I actually did an interview with someone the other day, and it was meant to be for a book. And when I got on the phone I was like, "You're answering questions. Like, why are you answering the questions? Right? You're saying that it's the Liberal Party that are giving giving a negative gearing to people that's pushing up the house price. You didn't want to listen to what I had to say, right? So yeah, with it looking out there, so many people have sort of opinions and all that sort of stuff. Make sure that if you're 20 years old, have clarity on where you are heading and just take action. Don't listen to the noise out there. I remember when I was younger, there were so many people giving me their opinion, giving me their thoughts, giving me their feedback. Some of them came from a good place, some came from a bad place. But I would just be putting my head down, and doing all the steps that I need to do in order to get to that goal. If you were 20 years old by the age of 30, there is no reason why you should not be in a position of financial freedom. If you can build up a portfolio of 10 or 15 properties at an average price of $200,000 a piece, that'd be like sort of $2 to $3 million worth of asset that you could build up in your 20s. By the time you're 30, if you could go through one property cycle, those properties turn from 200 grand to 400 grand. You could, in essence, turn $2 million into $4 million, $3 million into $6 million by the time you were 30 years old. So, if I was starting out again, I'd go and build that portfolio very much the same as what I built back in the early 2000s. The only difference is that interest rates are much cheaper, rental returns are much better, knowledge is much easier to come by, and I would probably get there in half the time of what it took me to get to my portfolio of where it is today. So all starts, as I was saying beforehand, one push up, one chin up, one sit up. You want to be healthy, you need to start taking the small baby steps, and then they compound and compound over the years. So just taking note and care as to what steps you need to take along the way. Number two, do you think real estate agents are overpaid for what they do? My first job in the world, don't hate me everybody, was real estate. I worked in my family business, which was selling goldfish, and had an aquarium, like a pet shop. And that was my first job in retail. I worked in there from the age of sort of 13 to about 18. I got my first real job at the age of 17, working in real estate. I thought real estate agents are rich. I want to be a real estate agent. I want to be rich. I want to be like them. I got my first job in Western Sydney putting up 4 lease signs, and it was the shittest job in the world. And I tried to stick out in some gigs in real estate for a period of maybe like 2 years. It was the toughest job in the world, right? I went from property management to sales and all that sort of stuff. And it was the worst job. I thought to myself, if I had to do this for the next 40 years, like, what is the point in, like, I realized that life was a prison from having to work in real estate. I think that real estate agents, and this is no offense to any real estate agents out there, I think they're underpaid. I feel sorry for real estate agents out there when they're like, dealing with the stuff that they deal with on a day-to-day basis. Most people think that it's like watching, listings in LA or whatever the case may be. It's not the case. You're not on the phone doing cool deals, chatting to people, having caviar and eating lobster every day. Real estate agents are dealing with like people that have got emotions, right? Imagine listing a property, right? So a real estate agent has to go and list a property for sale. They have to go market the property, then they have to go find a buyer, and they have to get the buyer to complete on the deal. In that process, you might go out and talk to 100 people to sell a house. Maybe one or two will sell their house. Then they do get the listing, then they go get the buyer, they get the buyer in, buyer buys the property, then their uncle comes in and says, don't buy the property. They say, oh, I've watched TV, I heard there's a scam demicon, I've got a face mask on now, and I don't think it's right to buy a property. The deal falls over, weekends, nighttime, all that sort of work when it comes to real estate offers, and they don't get paid all that great level of money. If we look at property management, it's a whole different kettle of fish, and there's my staff are on here; they can talk to you about that. But yeah, from that perspective, there's a lot of management keeping the cash flow coming in for the owners, a lot of maintenance along the way, a lot of you're dealing with people, right? When you're dealing with people, you're dealing with emotions. When you're dealing with people, you're dealing with finances. In property management, it's a very tough job. I actually don't feel that property managed. My staff may say they want a wage increase after I give them so much praise today, but I actually don't think that real estate agents get paid enough for what they do. So that's just my 2 cents on that perspective. Please don't email me or my team asking me for wage increases now. 3, would you take the risk of buying brand new properties? No, not unless I'm getting it for cheap. Most of the time when people are selling those properties that are brand new and off the plan, generally they have $30,000 to $50,000 commission loaded into them. A lot of people get burnt on that front. I have people coming to me every day of the week saying that they want me to sell their properties. I could sell you off the plan properties. I could sell you brand new properties. I get the opportunity to buy these things every day of the week. $30,000 commissions, $50,000 commission. Someone is paying for that. And generally that is the buyer because they're building that into the price. It's like a brand new car. When you're buying a property that's brand new, there's a lot of depreciation. The property goes down in value very much so. So I'm all about buying properties that are below market value, upside for capital growth and strong cash flow. Question I ask you is if you're buying a new property that's negative geared, it's got shit cash flow. If you're buying it where it's overpriced, it doesn't have upside for capital growth because it's got to recover for the price and it's very, very high risk. So unless I'm getting it below market value, I wouldn't be buying that. I heard CBT training can help people with overcoming flying in planes. Would be great to party up in Ibiza next year with you? I'm a pretty boring guy, Sam. So I've always thought, it'd be cool. A lot of people always say they want me to go to Vegas with them and all that sort of stuff and think I'm some cool party guy. I'm not really. I'm pretty boring. So with it, I'd be interested in going on a flight though. So yeah, got a question here from Instagram. Khalil King. I thought real estate agents earned a lot. Some agents do, but I think a lot of people are glorified real estate agents of earning all this money that are, high flying and driving around the Mercedes Benz with a car phone and an assistant and all that sort of stuff. So, real estate agents, I deal with them more than anybody else probably in the country. I've got 27,000 real estate agents in my database where I talk to and communicate with and market to. From a reverse perspective, I market to them as give me properties. I need properties that are cheap, that fit these sort of parameters. I feel sorry for them. Like they don't earn all this cash that everyone expects them and beats them up to be. So they're not all that bad as people. Some agents out there are complete dicks. Some earn a lot of money as well. Some are earning little money. Some are earning average money. And some earn like a very good keep. I know people out there that earn 7 figures in real estate, but those guys are few and far in between. So yeah. Hey Birch, what is the meaning of life? Also, I engaged Zinger and Denisha was nice and helpful. My borrowing power was very low. Cool. So yeah, I'm going to read that out. I engaged with Zinger, and Denisha was nice and helpful. So Zinger Finance, um, if you need help from finance guys, reach out to my team. Denisha is one of my brokers there. She's nice and helpful. That sounds like we're talking about the same Denisha. She's awesome. My borrowing power was very low at 290 because I have 20 grand personal loan. Without that debt, it's 470-ish. If I pay out that debt, my deposit is reduced by 20 grand. Any other options/advice? And can you help me buy a below market property in a location I choose because I want to value add to the property? And or do you only select investments in certain locations? How long have we got before massive inflation? Thanks and keep in touch with yourself. Thank you. So what is the meaning of life? That's different for everybody else, right? I'm not here to, question science, belief systems, religions, or anything like that. I think that life is what we make of that, and you've got to certainly enjoy that. All about personal liberties and freedom, and people being able to live life on their terms. Your borrowing power is low at 290. 290. Don't be shortchanging yourself, right? If you've just been told that you can only borrow $290,000, that's actually pretty good, right? Like 290,000. Your 290,000. I'm just seeing messages come with the numbers on them. If you've got the ability to borrow 290 grand, probably have to put down a 60 grand deposit. You still can purchase property up to about 350,000. You could possibly buy two properties for 150, 175,000 each for that price range. And if you buy them with a high enough yield, you could possibly come back and buy another 200 or $290,000 worth of loans as well. So I always look at the serviceability of my investors and what that enables them to do. Because you may feel like I can only buy 290 today, but if you can buy the right assets that will boost up your position, you can increase that level of serviceability to continue to purchase more properties. I see people from all different walks of life. I need to have a look through your position personally and have a bit of a review of what, I don't know how much money you've got. I don't know, what equity you may have in other properties, et cetera, et cetera. So there's many variables in that front. But a lot of people don't realize that having a credit card, having a car loan, having sorts of store credits and stuff like that, that Amex that you use to get points, which are never going to fly anywhere anymore, that, can affect your servicing a big time, big time. So, if you've only got 20 grand deposit, paying that 20 grand down to get an extra, 200 grand in servicing won't be the best thing because you've got no deposit. So you need to work out a variable in the middle, like, do we pay this deposit off? Do we pay this personal loan off, or do we keep it open? And that's the catch-22. So without knowing, like, if you're sitting on 100 grand, maybe it's worthwhile paying down that debt. If you're sitting on 40 grand, maybe it's not worthwhile paying down the debt because you're not going to be able to get in the market. So, can I help you buy a below market property in a location that you choose? Yes, I purchase properties throughout Australia from coast to coast. I purchase properties. I'll get to the question there, Jono, as well. Purchasing properties from coast to coast. I buy them from top of the country down to the bottom of the country, from side to side of the country as well. So many areas that people didn't even know existed. Tell me where you want to buy. If it's in somewhere that I feel comfortable with buying, I'll let you know. If it's somewhere that I think is overinflated or not good buying, I'll certainly voice my opinion. I'm not here to help people hurt themselves. So if I feel that it's going to be detrimental to your success or could hurt you in any capacity, I'll be very candid in saying that to you as well. So, if you tell me where you want to buy a property, I can help you buy a property in that location as well. How long do we have before we have massive inflation? We're starting to see high levels of inflation at the moment. However, I think there's still time. I believe that the hyperinflation cycle that I've talked about a lot to you guys on this channel will play out over the course of the next decade. So, yeah. John over here on Instagram said Queensland housing market predictions for the next 6 months. We are seeing a boom in Queensland at the moment. I'm seeing properties. There's a lot of buyers out there at the moment, a lot of activity happening in the marketplace. Prices are starting to rise. Stock levels are drying up. The amount of stock that's on the market, there's less, and days on market's much shorter. So depends on which end of the market, but overall the market is heading upwards quite a lot there in Queensland. And it's one of the markets that's on my radar. I always said when we see the next boom, I think that Queensland will be probably the first cab off the rank. And it's, multiple states are experiencing booms. Places that you would never experience or thought would experience boom have gone through booms. There are some areas around the country which I have personally seen that I've physically visited this year, which have sort of experienced 100% growth. There is areas in this country which have doubled in 2020. So, for those that are expecting a bust, it's not happening out there. Emilio, hey Nathan, with the current pandemic, we're seeing increased unemployment and some challenges around tenants' abilities to service rent and landlords encouraged to discount. Does this cause you or any of your clients to be concerned about servicing loans when running a portfolio of multiple properties? No. I always like buying properties that are blue chip and blue collar. I call them blue collar, blue chip properties. Which are in capital cities with blue collar workers in them. In the market that I'm working in, predominantly with my investments, I have properties that are in Vaucluse in Sydney, all the way out to real cheap areas. So it's all different places that I have purchased over the years. But most of my properties rent for $200, $300, $400 per week, and they're average everyday working people. My tenants that are on properties, literally, there's people that were working, pay me rent, and they're getting paid more now for sitting at home, right? That's a really, really funny economy, right? And these people might be doing it tough and different things that could be going on. However, if you're sitting at home earning more than what you used to earn from working at a job, right, there's enough money there to pay the rent. So throughout Blink Property, across all my offices, I have not even seen one owner have to reduce their rent in order to accommodate a tenant. So if you're a tenant, don't hate us, but it is what it is, and there's different channels. If you don't like the property, you can go find another property to go lease and all that sort of stuff. However, we have not seen delinquencies rise or go crazy. There's always that occasional tenant that may not pay their rent on time, or maybe a couple of days late, or maybe a straggler or something like that goes behind in rent. And those tenants have been there, and we haven't seen any sort of spike in delinquencies in that front. So I'm not concerned at all at this point in time, and I don't see it being a concern any time in the future, because the government like to pay rent assistance payments. They're paying JobKeeper, JobSeeker. They've already played their hand, and they've shown their position in the marketplace and what they're going to be doing to stave off some sort of recession. And I'm not concerned on that front. But there are some markets which I think we will see rents come down in. And even in some of the high ends, right? I saw a property the other week where I know someone was living, and it was released out, and they needed help with something there. And I went around and helped them with something, and there was an open home going on, and there was literally a lineup for an hour around the building. So it was just, even in some higher end sort of places that occurs. Matt, how much increase in serviceability on average would you receive from an extra 10 grand in income from properties purchased freehold in cash, weighing up pros and cons to sell an underperforming asset to continue moving forward? There are many variables. If I take this correctly, if you receive an extra 10 grand in income, that could relate to another 100, 150. That's just off the cuff. I'm not a broker, can't give you that advice. If you do want to have a chat, flick us a message, flick us a DM, reach out to my team at admin@binvested.com.au. I'll put you in contact with one of my senior brokers, have a look at your position and tweak a few things. Maybe you don't have to sell that property off. Before you sell an asset off as well, don't just sell a property thinking, okay, I'm going to dispose of that asset and move on and pay out the loan and all that. You could be selling off a property and use that loan to purchase more property. So, for example, you might have a property you bought 10 years ago for 500 grand. It could be worth $1 million. You could owe 400 grand on it still. You may not be able to borrow a loan. However, you can sell it off, take that profit, but then keep that loan open and attach one or two or even three new properties to that same old loan. So if you are thinking of selling a property, reach out to myself, reach out to my team, give me a background of your position, and then we can reassess, what options there are to see if, you may be able to keep that loan open after you dispose of the asset. And it is a way to be able to do things. It's called a security swap. There are guidelines and parameters around that. If you are getting a new property, or getting a new loan, it's important to make sure you structure yourself correctly so you have more flexibility around that. But I have done it in many, many different situations, and there will be a video coming out shortly talking about a real life example where I've been able to help someone with 2 properties get to 10 properties within a month. So, yeah. Tommy, how can I get a one-on-one with me? One-on-one is called a map session. If you want to have a strategy session with myself and one-on-one with myself, reach out to my team. Email us at admin@binvested.com.au, or call my office on 1300 367 925, and I'll be able to, my team will be able to book you in. Strategy sessions, I don't handle my calendar. I just know on the day who I'm speaking to, how I'm helping them, and a background on their position. So if you would like to book in for a map session or a strategy session, just reach out to my team. It's called a map session. $499 or $495, something like that, for the strategy session, but well worth it. If I just give you one little tip that'll make you $500, $1,000, 10 grand, 50 grand, 100 grand, $1 million. It could just be one little spark that changes the way of mindset that could go on to make you lots and lots of money. Amber, hey Amber, hope you are well. Apan, thanks Nathan, appreciate your help. Good talking to you this evening, mate. Where are we? Good to see we've made it, Scott. Kurt, with the currency bubble about to pop, what will that do to the Australian property market? I believe that we're going to see massive inflation. I've talked about this extensively over the course of the last sort of 6 months, 12 months, even to about 36 months ago. I believe we're going to see all asset classes, every sort of purchase, whether it comes down to pieces of paper that you can buy, whether it comes down to bottles, whether it comes down to iPhone chargers. Here we go. Whatever it is, the cost of goods will rise. Property is just one of those financial instruments out there that we will see rise. Ultimately, as we see the currency demise, everything that has occurred to other currencies when they die, they go to a very deep low point. They just print lots and lots of money. They head into a high level of inflation, sometimes hyperinflation, sometimes not hyperinflation. They print themselves into oblivion, and then trying to recoup their position, they will go to high interest rates. So there will be a point maybe in 5 years' time. It won't be until Big Mac meals are $300, $500 a piece. It won't be until the currency is completely worthless that we will see interest rates go up. But there will be a point where interest rates do go massively again at the other side of it. So it is something that's occurred throughout all currencies around the world as they do go into the death spiral. So we are nowhere near that at this point in time. Hyperinflation is still a topic for this decade. I don't believe we're going to see it happen in the next 6 weeks or 6 months or 2 years. I think it's something that's going to gradually creep up on us, and we'll be able to see it and acknowledge it. But a lot of people will not be even thinking of the conversation of, wow, what is actually happening in front of me? They'll just be a victim and a cause and effect of monetary policy and currency manipulation out there. So Angelito, hey Nath, I'm on a point in my life where I believe I need to learn more things through real life experiences instead of just reading books, which has helped me the last 6 years to purchase an investment property and a principal place of residence. I've always believed in real estate is the best vehicle for wealth creation due to some nature of for leverage. However, at the moment, I'm in a process of building my own business and later use the profits to invest in real estate. I guess the question is, do you think building a portfolio relying on your 9 to 5 is the way to go, or should people try to find their own ways to fund the portfolio, such as building a business? Good question. It did get raised beforehand. Should you build a property? Should you build a business before building a property portfolio? For me, Personally, I went and worked in a job and used my pay slips in order to get finance. But it depends. Like if you're going to quit your job tomorrow and start a business, that could lock you out for 24 months, 12 months, 24 months before you can start getting a loan. If you're in a business already, I wouldn't suggest go and sort of get a job to try and get loans and close down your business. You need to take a look at what is the bigger term picture. How can you scale your business? How can you get the maximum sort of position on a cash flow perspective? How can you get that cash flowing in? Some people that can't buy a property at the moment because they can't get a loan, it could be that you could do something different, right? Like people ask me, should I go and why do I buy these properties that are 10,000, 20,000, 40,000, 50,000? If you don't have a job, and you've got a business and you can't get a loan or whatever the case may be, you can either do nothing or you can sit there with 20 grand and go and purchase a little cheap property that could go up to $50,000. And then when you can get back in the market and get a loan again in 6 months' time, 12 months' time, you could use that property as a vehicle to get you on to the next one. So if the property you pick it up for 20 grand, it doubles and goes to 40, 50, 60, 80, 100 grand. You could carry that property, dump it off, take that cash when you can get a loan. With that cash, go and use it as a deposit to go and purchase more property. So, you should always be looking at your position, asking yourself, what can I do whilst you're starting your business? I always think it's important, and this is what I put in my map sessions, like, if someone is planning to become a contractor, becoming self-employed, don't just walk out, quit your job today and go, I'm going to be self-employed, I'm going to get a loan. You need to plan it over the next 12 months. Like, can you buy 4 properties now and you're going to be stuck anyway for a period of 6 to 12 months? Quit your job, build your business at that period of time, create it around a tax year, start your side hustle now. Like, how are you planning your business strategy inside of your property acquisition strategy? How are they going to work hand in hand? Have you given any thought to, how you're going to transition from a job into a business? How's it going to affect your overall property strategy and your acquisition strategy in the bigger picture? So they're all things I think people really need to look at and consider, because I remember back in 2011, I had an investor that did maybe like a half dozen properties, was in a very solid position. And I think he was on like about 150 grand a year. Been working in the job for 20 years. Came in all proud one day and said, look, I've got so much money now, I can service more property. It's like servicing wasn't the biggest issue for this person, but this person went from being a PAYG to contracting for the same business. So this person worked for the business for a period of 18 years or 20 years, became a contractor, worked for the business. Everything should have been the same. However, that person, they were able to get an extra 30, 40 grand a year income they weren't able to purchase for a period of 2 years, right? That was the years between 2011, 12 and 13. 2014 came and the property market had almost doubled. So looking at that person, they had locked themselves out of the property boom because they didn't plan for their transition from a job to self-employed. I just noticed there, Greg had said that it happened to himself recently, needs to have 2 years financial. That's something you need to factor in to your position. What I mentioned just then beforehand should be a conversation for us to have with that 10 grand property that I was talking about beforehand, Greg. That may be of an interest for you. Jono here just asked 17% interest rates, referring to my comment that interest rates will go up at the death cycle of our currency. We have had 10 years of interest rates going backwards or staying stable. We are going through a slow, long, drawn-out death on our currency. The 17% interest rates, will it go back to there? Interest rates could go, if we look at Turkey, that was at 60% from what I understand. The interest rates there going back 2 years ago. So I don't know what it's at the moment. I think it might be much lower than 60%. But that is at a point when interest rates go up so high. Don't be fearful, guys, that interest rates could go so high. You will know when interest rates go up so high because everything will be papered over. The central banks have shown their hand. They have made it very clear that they're just going to print their way through this monetary cycle, and it'll eventually come to the death of our currency. Kurt, is it better to use your equity as a deposit for your investment property or your cash for a deposit? Um, if you've got equity, why not save your cash and keep it on hand? It doesn't matter whether you've got equity, wherever the money is coming from, as long as you are, moving forward and closer to goals. So if you've got cash, you can use cash. If you've got equity, you can use equity. I'd prefer to use equity first, so you can keep a cash buffer because you can always use that for something else. If you can't access the equity, then obviously use your cash. Looking at the aspect of having that right team around you. Some of the other issues that I've seen over the years is your accountant that can sit there and say, okay, let's structure you in the wrong way. They might look at how you can save some tax. Saving tax is great. I was talking to someone yesterday and we're talking about how they structure their business and whatnot, not going into any details. And I was like, that could hurt you a lot for being able to obtain finance. So sometimes I see people that have gone to their accountant, got some great advice, and not paying any tax. Cool, they're saving 10 grand this year or something, but they're not going to be able to purchase properties and make themselves $1 million on the property front. So you want to make sure that your accountant is aligned to your property goals. Your mortgage broker is aligned to your property goals. Your solicitor is aligned to your property goals. Your advisors, your financial advisor is aligned with your property goals. Your buyer's agent is aligned with your property goals. A lot of people ask me, oh, Nathan, you go buy properties and all this sort of stuff. I've spoken to this buyer's agent out there. I run a buyer's agent. I'm the buyer's agent, right? I don't have a team of people there that are buyer's agents. I am the buyer's agent. I make sure that when I'm purchasing properties that it's going to help, their portfolio and them get to their financial goals. So yeah, something to bear in mind. Andrew asked, hey mate, do you rent vest? I lived at home in my mum's house, in my family home, till the age of about 27. I didn't rent anywhere. I went and rented one property for a period of about 12 months before I bought my first principal place of residence, and I live in one of my properties at the moment. So with it, I started off, you could call it rent vesting because I didn't have a principal place of residence. However, I built my portfolio to a certain point, and then I rewarded myself by buying the right assets for my principal place of residence. So if I look back, my original ability to buy a principal place of residence was only going to be able to buy a 3-bedroom red brick house for maybe like 400 grand, would have been with a lot of difficulty. High interest rates, remembering at the time, at 8 or 9%. Would have set me back at that point in time. Wouldn't have been able to build my portfolio out, and I'd be probably sitting in a place that would be worth like $1.2 million right now. That would have picked up for like 400, and it would have been okay, but I wouldn't have been able to purchase maybe like 20 or 30 properties at that time. That enabled me to go and do some other cool stuff, and it's a compounding effect on that portfolio I was being able to build at that period of time in my youthful years that eventually enabled me to go buy my principal place of residence. So like my first principal place was 1.19 mil. It's currently worth about $4 million just for land value. I plan on redeveloping that and maybe getting a net realization around the $20 million in the future. Principal place of residence, go for that tax. But yeah, I've got another principal place of residence which is much greater than that as well. So yeah, with it, I did start off with not buying the principal place of residence, but it was all strategic in order to build myself to where I am today. None of it's ever been easy, right? So don't ever think that Nathan's had it so easy. There's been a lot of adversity along the way, lots of hustle that's occurred. But would I change my life for any reason? No, because I'm very happy with where I'm at in my life. So yeah. Angelito, especially living in Victoria where the 9 to 5 is non-existent at the moment and everyone is on the job keeper, job seeker. Good point you make there. If you are in a position now where you don't have a job, you haven't got an income coming in from a 9 to 5, you could be sitting at home watching every series of Netflix, getting brainwashed from what's on the TV, or you could be out there spending that energy building something for yourself, whether it be a business, right? And even if you are working at a job and you're happy, how many levels of income streams do you have, right? If you lost your job tomorrow, would you be okay, right? Would you be financially in a shit spot? Is there something you could be doing today that could set yourself up? So, I don't have any courses to sell you on how to build a business. I don't have any business sort of strategy stuff that I can sell you. But could you be building a side hustle, right? Do you only have one stream of income? Property portfolio is, multiple streams of income for you. That's great. But, what else do you have in your position? Do you have just a job? Do you have a job plus a business? Do you have a job plus two businesses? Do you have a job plus some, reoccurring revenue from other streams of investment? Do you have a job, a business, another business, three properties that bring you income? What is it that you can work on to continuously put yourself in a better position? So, on that note, I can see Instagram's about to end. I'm going to end the Instagram videos and invite you guys back. Give me 2 secs because I'm not finished yet. We go Facebook live, go live. What have we got here? Dennis, can we still get 90% LVR lending for investing? And when are you expecting a property market boom? I believe we're in the early stages of property market boom already. I'm seeing that very clearly and avidly throughout all my dealings out there in the marketplace at the moment. The market is very hot. There's lack of stock in the marketplace. There's lots of people buying property, lots of people getting access to cheap credit. The banks are freezing up because they don't have enough, personnel to keep up to the level of demand coming through. So there is a big delay. So if you go to a bank like ANZ, there's actually a 42-day wait to get a loan approval from ANZ, which has never been seen before. Normally it's like 1 week or 2 weeks. It's actually taking multiple weeks and it's over a month to get a loan. So there is a boom occurring out there. We're in the very early stages of it, and I think it could be a mother of all booms that's coming. We've got money that's cheap, money that's free, and it's going to become more and more cheaper over the course of the next months to years. And the other thing to realise is that we've had all this Royal Commission, APRA changes, and all these pressures put into the marketplace. All those regulations that have been put on to control money supply and liquidity in the market, that has gone out the window, and easier sort of policies are starting to come through the market. So as for can you still get a 90% LVR? Yes, I believe there's banks out there and lenders out there that do that. In my books, like I manage billions of dollars worth of loans for people over the years that have done it, like billions of dollars worth of loans for them. We've probably done maybe less than 2%, which would be over 80% LVR. It's just the way that my finance strategists structure the loans for my investors and owner occupiers. So we put different sort of strategies in place to minimise the amount of people going to 90% LVR. The reason behind that is when you're buying a property with a 20% deposit down versus to a 10% deposit down, there's a lot more flexibility for lending options. The ability to pull equity out is much better. The ability to purchase more assets is greater, and there's less restrictions on building that portfolio. So yeah. Adam, tell me about Southeast Melbourne or Victoria. Yeah, tell you lots of things. I feel sorry for everyone down there at the moment. I hope everyone's doing well in Melbourne under the current situation that's going on. As for buying properties down there, I've never been an avid fan of buying properties in Melbourne. It's not that I hate Melbourne. It's not that I hate people from Melbourne. It's not that I hate the state. The reason why I haven't been a big fan of them is that the ability for them, I feel that there's more supply than what there is demand. So basically you can just drive 10 minutes down the road, build another 5 new suburbs and go, cool, there's enough properties here to support the amount of supply that's coming, or demand that's coming in the marketplace. So looking at the Melbourne market, am I a big fan of that market? No. Do I think it's a bad market? No. But do I think there's better markets? Yes. I'd rather be buying in Sydney than Melbourne. The costs that I buy in Sydney are very, very cheap. The ability, I can actually buy cheaper properties in Sydney than what I could from the cheapest properties in Melbourne. So does that stop me from buying things in Melbourne? I'm actually in the process. I was dealing with a loan shark the other day. I was talking to one of them just on a different matter, and they asked me when I was on the phone to them, "Hey Nathan, do you have the ability to purchase some properties?" Right? And I was talking to them about it, and they go, "Look, we're not in the business of taking people's properties off or anything like that. We've got someone that needs some help, and I'm in the process of talking to some people down in Melbourne about purchasing some, below market value developers sort of stock, which is very cheap, to help them out to be able to, get them off the hook on that front. So, am I adverse to buying there? No, but I just believe that, on a day-to-day basis, there's better value in other states. But, will I buy there? I do buy there occasionally. And yeah, I'm doing a deal there at the moment. So keep an eye out for a bulk deal, which is brand new in Melbourne. Ash, said it to you, man, many times this year, but seriously learnt more in 4 months watching these videos in the last 4 years about property. Thanks, Nathan, through the economics, the commies. Thanks, Ash. I appreciate the love and the feedback. I appreciate that you let me be a part of your evening and in your home. Stocky, I deal with real estate agents on a daily basis, anywhere from 30 to 80 agents a day. A seriously question how many of them got their real estate license. If you don't know the difference between a lessor, a vendor, a principal, you shouldn't be in real estate. And these guys are supposedly doing multi-million dollar deals. Exactly. Ayapan said Kabir from Zinger Finance was awesome. Thanks for the feedback. I have a really, really good and strong finance team, as do I have a very strong asset management team. I see all the time my team here from the Gold Coast on board. My team from Sydney are here. I have a very skilled and energetic investor relation teams. I can see that there's like 3 or 4 of my team online here, and I think there's one over on Instagram. So a lot of my team here as well. So thanks a lot for they don't just go and work a 9 to 5 job. They're here to support the community, support you guys. If you do like what my team do, it's got this little competition going on at the moment. So if you do appreciate what Kabir does from Zinger, if you could give him maybe a Google review, that'd be awesome. If you like what Denise is doing from Zinger, if you could give her a Google review. If you like what my team, Gemma, and Pat and Kevin and Jeremy and Aaron are doing in my team, give them a Google review. That would be awesome and much appreciated. If you like what I'm doing, send over a good Google review. That'd be more than anything. I'd love that, guys. So Justin just wrote, spoke to Rose at Zinger, looking forward to referring business to her and helping our clients. Thanks for connecting us. Justin, I know that you will be in very safe hands. Rose has been my personal broker for a period of about 15 years. She's done about 80% of my loans personally, and I've built a portfolio of 200 sort of properties. So yeah, if anyone's going to be able to help your clients more so, it would be my team at Zinger. So yeah, I'll stop plugging Zinger, but thank you. Dylan said, what sort of rent did that 52 grand property get? I think it needs a little reno to it, but it'll probably get sort of 150, 180 bucks a week rent on it. Previously, the next door neighbor had sold for 300,000 in better days, but very, very cheap. $52,000 for a house doesn't get any cheaper than that. Lydia, hi Nathan, just got asked if I wanted to sell a property I purchased in February 2020 by another real estate agent representing a buyer. It's a house I purchased for 250s, valued at 270s. It's positive cash flowing. I think it's a developer that is interested. Not sure. My question is, would you sell or keep the property purchased less than 1 year? Because I don't see any point in selling, because I believe it would be better to keep long term for the positive cash flow. Thank you kindly. And do you think we can pick up properties under 100 grand and pay cash flow because I can't get a loan due to no pay slip because of job loss? 2 parts to it. I'm just noticing my batteries are starting to die on my devices. The first one is that constantly you will get messages from real estate agents saying, hey, I've got a buyer interested. I'll get back to your answer to you soon, Greg. No, it's not that. The real estate agents will constantly sort of try and prospect and say, hey, I've got a buyer. The reason why I developed Blink Property is because I wanted to make sure that I look after my investors very differently than real estate agents. I don't sell properties. We manage properties as asset management, trying to get the highest rental returns. Looking at real estate agents I've seen a lot of my investors over the years where they bought a property for 150 grand or 200 grand. 6 months later, I haven't spoken to them for a few months. They've spoken to the real estate agent. The agent's gone, look, I'll get you a sale. I've got a buyer interested for 250. Next minute it sells for 230. And I look at them and go, where's your property? And they go, oh, we sold it. And it's like, what do you mean you sold it? Like, I sold it for 230. And it's like, the agent said he had a buyer at 250. Sort of like a bait advertising to sort of get you on the hook and wheel you in and condition you over a period of a few months, and then they wheel you in and then they sell the property, that you pay them a commission, they offload the deal, and basically they're just copying fees. What I've looked at with my investors over the years is when they get into this sort of position, um, you know, they're losing their portfolio, right? Like, you're building the portfolio for a reason. So if you're going to um, purchase it for 250, valued at 270, like, you're not going to make anything out of it. So I wouldn't be selling that asset. I'd be keeping it, because what is the original goal? So if you have clarity on what the plan is, what is the original goal? Why did you purchase that property? And how's it going to help you get there in the longer term? Will it be doing you the service and getting you to the end position if you sell it today? And if you sell it and make 20 grand and pay the agent's fees, stamp duties, and all that sort of stuff, what are you actually benefiting from doing the deal? That is the question. So you need to ask yourself each step along the way, is this advice that I'm getting going to help me get closer to my goals, take me away from my goals? What is the advice going to steer me into? How is it going to, take me off course? What is the person's agenda or motive for telling me to do such things? So I don't know much about the property. I know I've seen you talk about your job, and I understand you're, in the aviation industry. So, if it's something you need to sell for a personal reason, finance wise, we'll then make that call. But if it's something that you don't need to sell, then, keep to the original goal as to why you bought the property, and, making it get to that position for you. And do you think we can pick up properties under 100 grand and pay cash? I just did a deal for someone today for $25,000, and it rents for $120 a week. The owner paid for the property in 1999, so 21 years ago. They paid 110,000. I picked it up for 25,000 and rents for $120 a week. So yes, you can buy properties at that point. Andy, it's a GoFundMe. I'm not too sure what that's to do with. If that's someone that you know, apologies to hear, and my condolences. Yeah, I'm not too sure about that. So Justin, seeing material prices on homes moving average 5% in the last couple of months. Justin is a builder in Northern Territory. Another shout out for you, mate. With it, looking at the cost of building, that's interesting, because I'm always wanting to hear where inflation is hitting next, right? I've seen someone post the other day some food in a magazine. It was like a Coles magazine. It's like, a month ago it's this price, now it's this price, right? I'm seeing a lot of inflation occurring, which people aren't talking about. This, the news ain't reporting on it. If they are, they're covering over, blaming the scamdemic for it. Looking at your building industry, that's an area which is very interesting to see that material costs have gone up 5% in the last couple of months, right? If that was averaged over the year and it goes up at the same sort of rate, that could be 20% in a year of inflation. All commodity prices are going up at the moment. The cost of labor is going up. The ability to find stock is just going through the roof. So thanks for sharing that, Justin. Erkan, currently in Turkey, home loan rates are approximately 13% per annum. 13%, guys. It was lower than that, and it was much higher. But when the currencies die, interest rates will rise, and we're nowhere near that point in Australia. And no one should be scared about interest rates rising at this point in time, because they're going to continue to come down or stay where they are. Mahesh, you're a rock star. A lot to learn from you. Keep us motivated. Thank you, Mahesh. Markets moving in Darwin, none of that sea up here. Life is normal. Thanks, Nathan Spire. Hustle work each week listening to you. I'm better spending my time building something for myself than listening to what Dictator Dan says to us here in Melbourne. I just noticed that my laptop is at 2%. When it hits 1%, I'm going to end this Facebook Live. But I'm just going to run through a few last questions. Saved a bit more, got me thinking more. Maybe should I sell one of my properties? If it is profitable, swap it with your help for a couple out your way and use the excess funds to pay down my principal place. PS, did email the team today, and I can't see the rest. Advise them that where I was at, but never thought of this idea. If you want to flick me a bit more of an email on that, Simone, and I can have a look further into it. I remember we had the chat a few months ago. Maybe highlight to me which ones you are thinking of selling, and maybe I can give you some feedback and pointers on that front, and we can spitball a few ideas on what we can do to move forward. So restructuring, rejigging that portfolio, there is always something you can do. If you feel like you're stuck, don't feel that it's game over or end of the road for us. There could be something we could do to do a security swap, sell off an asset, keep those funds, be able to purchase a few more assets that are going to help you get back online, back on track from a cash flow perspective to keep building that portfolio out. Is manufacturing equity by doing cosmetic reno still ideal for beginner, or do you not bother? I don't do manufacturing equity nowadays because I just don't have the time, effort, or energy, but there is possibility there to do that. I did that a lot in my early days of building my portfolio. Do you do self-managed super fund property, and what do you suggest is potential to do for 250k? My battery is about to die. I need to end this video, but I do self-managed super fund property. My team specialize in doing self-managed super funds. A lot of financial advisors will not advise on that because they don't get paid the commissions for doing that. So I believe everybody should be their own financial advisor rather than seeing a financial advisor. It's important to get some feedback from them. But if you do need to speak to a financial advisor to set up a self-managed super fund, it is a very, very important thing to look at this point in time. Feel free to reach out to my team. They can put you in the right direction. As far as speaking to a financial advisor, there's very few and far in between that actually do advise on setting up self-managed super funds because there's no vested interest there for them. I know two. I trust them very much, and happy to put you in contact with them to help talk to you about doing a self-managed super fund. On that note, thanks for watching again, guys. Thanks for tuning in. We'll catch up shortly. And I just saw someone wrote here, buy a charger. Great session. Thank you, Rebecca. And with it, I do have a charger. It's connected over there, but it is not connected to my computer at the moment because I am out of PowerPoints here. So on that note, if you need help with anything, feel free to reach out to my team. Email my office, admin@binvested.com.au. Give us a call at 1300 367 925. And look forward to helping you kick ass and be a part of your journey, and stay safe and make sure that you tell those commies where to go. Catch up soon, guys. Bye for now.